2025 has been an absolutely crazy year. From a massive year in 2024, where we were riding high, into this year where we had a tariff news bomb that absolutely decimated the markets, and we saw 20% plus correction in the market, followed by a V-shaped recovery back to all-time highs where we're sitting at right now. Everybody's talking about massive move that we just had in this V-shaped recovery. And did you know we had a bunch of names, a ton of names in the market, completely double from April lows, giving back 100 to 200+% on your investment, which is absolutely crazy. Because I don't know if you knew this, but the S&P 500 ETFs, such as like VOO, gives back an average return of 8 to 9% on average per year. So to get 100%, even get 15 or 20% in a year, absolutely great, and it's market beating return. But now to get 100 or 200%, that's on a whole new level. In this video, we're going to go over the top 12 stocks to buy to do this in 2026. I know that 2025 is not open. I know. We need to be forward thinking. We need to now think a lot of these names in 2025 have gone on these massive runs. Sure, they can go on a bigger run from here. I want to get into the names that I believe are going to have that next big run. The names we'll be talking about next year at the end of the year in 2026 that have ran 100, 200, 300+%. So in this video, we're going to go over the top 12 stocks I'm buying for 2026. And we're going to be looking at my viral post on X. If you are not following me on X, my handle is the RonnieV Show, just like it is here on YouTube. We have 21.3 amazing friends right now. Here is where I can more easily share a bunch of trades, investments, high five snapshots, you name it, I share it. We talk about markets, we talk about cycles, we talk about it all. So come give me a follow over here at the RonnieV Show. Let's get into it, guys. So some of the names I want to talk to you about that gave massive returns in 2025, names like Oklo, 235%. Absolutely massive. Robinhood, 208%. Enbis, 159%. Palantir, 134%. ASTS and Rocket Lab, your space companies, with massive 128 and 103%, respectfully. Other companies like MP, Pagayo, also gave 100% plus returns. That's great that they gave such great returns. And we were in some of these names. But Ronnie, we don't care about what 2025 gave. If you're sitting there as a viewer, you're sitting there saying, I didn't get 235% on Oklo or 208% on Robinhood. Ronnie, what are the next 12 stocks for 2026? I'll get into that. Don't worry. I got you. But you got me? Do me a favor. These videos take a lot of time. They take a lot of effort. All I need from you, sitting on your couch, riding in your car, don't get in an accident. All I need from you, smash that like button, hit the subscribe, and turn on that notification so you never miss a video again where I go over a high five gem before it blows up big, or you never miss an undervalued stock that I'm calling out, like a UNH, United Health Group, before that starts going big. And yeah, I called it out before I knew about Buffett. Do me a favor, hit the like, hit the subscribe, hit that notification, guys, so you never miss a video again. And you support me. That's the best way to support me to continue to make great content like this. All right, let's get into it. Top 12 stocks for 2026. Number 1, Hims and Hers. Hims and Hers is a telehealth titan. GLP-1 weight loss plus men's health equals rocket fuel. It's also the Hers side of the business that's growing rapidly as well. And if we know anything about women, I have my beautiful wife upstairs right now. If we know anything about women, they love their makeup, they love their hair products, they love personal care. Her side of the business of Hims and Hers does that very well with their subscription base. 50% plus revenue growth, massive. Zero debt, 3+ million members by 2026 they're slotted for. Trading at a steal deal, 100% upside potential for next year. And now, due to the recent dip, I think they have a 200% upside for next year. Intrinsic value is $79 per share, 43% margin of safety from today's price of watching the video. Next up, oh, and if you're wondering, because I said it went viral, 2.5 thousand likes, 589,000 views on this post. Absolutely crazy. Was not expecting this when I posted it. I never know when things go, when they're going to go viral. They just have mind their own. People like them or the people don't. I posted stuff that I thought people were going to love and they hated it. I posted things that I thought people were going to hate and they loved it. I don't know. People know what they want. You guys tell me what you want. I'm just going to post whatever I feel like posting and we'll go from there. Number 2 of 12. Oscar Health Insurance is a disruptor of health insurance industry. They're going after disrupting companies like United Health Group, Centene, CVS, which bought out Aetna, Blue Cross Blue Shield, and others. They're using AI-driven plans and scaling fast. 30% revenue growth. They're actually slotted for 32% revenue growth this year. 2 million members, which was just 1 million a year or so ago. And insiders are loading. Yeah, they're putting out hit pieces. They're putting out fear, uncertainty, and doubt around the stock. Analysts are downgrading the company like crazy. And guess what? Hedge funds and insiders are loading the boat. Undervalued 2 to 3 times upside by 2027. Intrinsic value is $42 per share, a 63% margin of safety. Absolutely crazy. To get 40 or 50% margin of safety, which is basically the fair value based on fundamentals and the distance from fair value to what the current price is today, to get even 40 to 50% is really great. 63%, astronomical. Number 3, iRen is an AI data center gem. They also do Bitcoin mining to AI InfraBeast. 170% revenue growth. 170% revenue growth for iRen. Are you kidding me? That is insane revenue growth, guys. Insane. 170% revenue growth, 4 times sales, 784% EPS growth. They're expected 784% EPS growth this year. Going profitable. Massive power capacity, 200% upside on this name. A fair value of $30 per share based on an EPS model, and that gives you a 36% margin of safety at the time of this report. Massive for this name. Number 4, you want to talk about a company that's centered around AI that NVIDIA itself had invested in? We're talking about SoundHound AI here, guys. Is a voice AI rocket, powers drive-throughs, autos, hospitality, and more. They're using AI to create virtual assistants. They're using AI to create to change lyrics to songs, to change someone speaking in English, to change it to Chinese in a movie. They're doing crazy stuff, guys. Basically, soon it's going to be no matter where you are in the world, like on Netflix, no matter where you are in the world, you can turn on whatever show you want, like Squid Games, right? Squid Games was based in Korea. When I watch it, I have to watch it with subtitles, right? You won't have to have other people voicing over. AI will just automatically translate the actors and actresses will just automatically translate their voices. That's what they're working on. Crazy stuff. Crazy stuff. 2x potential, fair value of $30 per share, 50% margin of safety from today's price. Moving on. Zeta Global had great earnings recently. They're falling. Their stock price is falling as of late, not because of earnings, but because of market weakness right now. And I love when we get great earnings and stocks move big afterwards, and then they start falling based on market weakness. Nothing has changed with this company. They're a MarTech monster, AI marketing tech with 40+% growth, cheapest in its class, held down by soon to be dismissed lawsuit. They have a lawsuit hanging over their head. I believe once that lawsuit on Zeta Global gets dismissed, we will see a massive move up to $30 per share, which gives you a 36% upside and 36% margin of safety. Because I have their their intrinsic value of $30 per share, and retail win stacking 2 to 3 times by 2026, a massive 2 to 3x on your money over the next 1 year. Lemonade, number 6. This is an insurance tech innovator. Lemonade's comeback story, near profitability, 30+% growth. They're growing massively. They're not yet profitable, and they don't yet have a positive free cash flow. But when we look at this company and how they are growing, and we look at the trajectory and we run the numbers, we see that when we do hit that profitability and we do hit that free cash flow from today's price, we're going to see a massive increase in the share price. 3.9 times sales, 7 to 10% free cash flow positive margin in certain quarters, disrupting the norm, 2 to 3 times upside, intrinsic value, $100 per share, giving you a 43% margin of safety or 43% upside from today's price of this recording. This name, they just bought car insurance company. So they are going to integrate into car insurance now. They do rental insurance. They do pet insurance. They're going to innovate and disrupt insurance industry, not healthcare. So Oscar doesn't have to worry about them coming over and stepping on their toes. They're going to disrupt the insurance industry. And I really like, all right, We're back at this again. Did you hit the subscribe button yet? Are you following me on Substack to see my articles, to see my write ups of companies? Are you following me on TikTok? Are you following me on Instagram? Are you following me on YouTube? All at the RonnieV Show, guys. Come follow me everywhere. I post a little bit of different content everywhere. UNH, number 7, healthcare giant. This is a moat company. Who knows it? Oracle of Omaha. Warren Buffett knows this is a moat. Warren Buffett sees the value in this company because he bought in last quarter. And I can almost guarantee that he's going to continue to buy. I don't know any time that Warren Buffett bought a stock just a little bit, just took a nibble, and then just didn't buy it. This man usually nibbles and nibbles and nibbles and nibbles and nibbles and takes over long periods of time to build on his positions and then holds for a very long time. He still holds Coca Cola. ACA rate hikes equals margin boost. Insiders buying big, innovating with Optum. So not just Warren Buffett was buying, but also some other large investors were buying, some super investors. And then we have 11 times free cash flow, which is 2 times potential intrinsic value of $499 and a 39% upside or margin of safety from today's price. Yeah, guys, this name has just gotten beaten down so much. It's severely undervalued. It's a buy here. You dollar cost average in this name. Guess what? It'll be a 5, 6, 700 plus dollar stock after they get past all this fear, uncertainty, and doubt around investigations. They just had a domino effect of bad news. And I think it's going to, like, just like any bad news, it goes away eventually. And then you see the stock price climb back. Are you invested in any of these top 7 so far? Drop a comment below, guys. Let me know what you're invested in. Let me know what videos you want to see from me. What stock should I be talking about? What stock should I be researching? What stock do you want to hear about? What do you want me to teach you about investing? What do you want to teach you about trading? What kind of videos do you guys want? Let me know in the comments below. I'm listening. I'm here. I'm here for you guys. Let's do this. Let's make some more videos. AMD, AI Gold Rush. Now, they're not going to dethrone Nvidia, but AI is pretty big. You only get so many of these big cycles, like the dot-com bubble. But we're not there yet, but maybe soon. But we only get so many of these, high-tech, innovative moments in history. The dot-com was one of them with the internet, and now we're seeing it with AI. There's plenty of room for Nvidia and AMD. They are gaining ground in Nvidia in some areas. And again, there's lots of room, especially in data centers, to grow. And I think AMD will take a little bit of that market share away from Nvidia. It doesn't have to take much for it to do not real damage to Nvidia, but be a really great bonus and revenue grower and driver for AMD. 40 billion plus revenue by 2026. This name is undervalued versus its peers. We have a 2 times upside, or it wouldn't be on the list. Fair value of $228 per share, 22% margin of safety or 22% upside from today's price, guys. Look, timing's everything. Could you have been getting AMD at $80 to $90 per share? Of course you could. But if you weren't buying in April and you're buying now, well, there's nothing you can do about that unless you got a time machine. You got a time machine? Let me know. I'd love to hop in it with you and go back to April and completely put multiple mortgages on my house and my rental property and just sit there and say, okay, I'm going all in because I know what happened in May, in June, in July, in August. But I don't think you have a time machine, right? Drop a comment below if you have a time machine. Love to hear about it. Just your toaster in your basement plugged into another toaster or something. I don't know. That's weird. AMD, still a buy. Should you build your full position out right now? Of course not. You're only getting 22% margin of safety. This is a name that you would discount dollar cost average into, DCA into over the next few months. And if we get a bigger pullback, you'll get a better discount. Number 9, guys, SoFi. SoFi Technology, a fintech disruptor. A lot of you guys know SoFi. This is such a retail favorite. They're now profitable. 20 to 30% growth as student loans rebound. Cheap valuation. Millennial favorite. Definitely a millennial favorite. They're basically getting millennials and younger generations to come on board, make their direct deposits straight into SoFi. And that's going to be massive for SoFi in the long run. Because once you set up direct deposits into a bank, and then they have investing and they have loans and they're a one-stop shop for you, typically you're not going to move away from that company or that bank. Typically you're going to stay with them for the long haul. I can personally tell you I've been with my bank since I was 16 years old when I opened up my first bank account. I've been with them ever since, through all my life, up to 32 years old now. The reason I've been with them that long, trust me, I've wanted to switch. I don't like just getting a penny or a few pennies interest on my money in there. The reason I'm still with them is it's just such a pain to switch over all my direct deposits, and it's such a pain to switch over all my automatic payments into all my different bills that I have to pay. It's such a pain. I don't have time to do it. I do, I just don't. So you see what I mean? It's one of those things that once they got you, they usually got you for the long term. They're running a great business model. They can continue to grow. They can get bought out by a bigger bank. I think this name's going to 2x in 2026. And I think they're going to have a big year. Even though they already had a big year in 2025, I think it's going to continue. I think it's going to keep rolling. It's going to do like a Palantir type move. Number 10. This is one that you probably weren't expecting. Enphase. Do you know what Enphase does? They're all about solar panels, guys. And I gotta say, this name is the valuation is so cheap right now, and they don't have to get back to what they were doing before. They just got to rebound a little bit to see real growth in their company again and to see the stock price move higher. Now, the world that we live in is moving towards solar. It is moving away from ICE vehicles. It is moving away from gas powered a lot of things. And Enphase is set to position, it's in a position to benefit massively from this. Okay. Now it's micro invest inverters surging as energy demand spikes, 40+% growth, trading at COVID levels. That is true. It's trading at COVID levels. And they've done a lot more revenue and net income and free cash flow and everything since that time. And I expect them to 2 to 3x upside in 2026, a fair value, intrinsic value of $60 per share, a 46% margin of safety. Yeah. I really like this name. It's not a name a lot of people are talking about, but I really like this name and do 2 to 3x in 2026. I do. Number 11, almost to the end, guys. D Local. We recently called this one out. I was expecting a 10% plus move after earnings, and we got 42% on earnings day and the day after. Massive. Payments powerhouse. They deal with emerging markets. They're growing free cash flow. They're growing net income, and they're growing revenue, and they're growing total payment volume massively right now. Talking like 20, 30, 30%. They are carving out a very, very nice business model for themselves and a very nice niche, and they are making a killing doing so. I believe this company, even after the 42% run, I believe they can 3x. I would say 2 to 3x. Let's keep it a little conservative. 2 to 3x. They did just jump 42%. I think they can 2 to 3x in 2026. Intrinsic value on this name is $30 per share. 47% margin of safety or upside from today's price right here, right now. Number 12. You made it. Thanks for being here. You hit that like button yet? LATAM FinTech Star NU, new digital banking beast, 50% plus year over year growth. Are you kidding me? 50%? What is this, SoFi? Low penetration. Analysts love it. 2 to 3 times upside. Intrinsic value of $40 per share. 67% margin of safety. This is a bigger company. It's about a $60 billion plus market cap, but they are growing very, very nicely. They are growing and they have a massive opportunity to continue to grow revenue. Their bottom line's growing with their revenue and their free cash flow is growing with their revenue. I really like this company for the long term, but I think it's going to do very, very well. It's been suppressed this year, to say the least. It has not gone on the run that we've seen with all these other companies, and I think it's going to have its big moment in 2026. Those are the 12 stocks that I'm buying, I believe, that will double or more in 2026. They're the companies that I believe are going to have the massive move that we saw with companies like MP, Oklo, Robinhood, Pagayo, and more this year. Yeah, we're a bit early to 2026. I know you might be thinking that. I got some comments saying that on that viral thread, but I don't care. Have a great day, guys. Enjoy your day, enjoy your weekends, and I'll catch you guys in the next one.